for you're going to find something like this, something very long, okay? You're going to find something like this. You're going to find so many lines, okay? But know that all these lines are what? Are useful to you. You're going to find so many of these lines as you're seeing something like this. But then these are the lines we are always talking about, the Fibonacci lines, okay? These are the lines we are talking about. But not that all these lines are important to us. You're getting the point. Not that all these lines are important to us. So we are going to be I'm going to be showing you which lines do we need, and then we are going to edit it out so that at least it to know. With people were always asking the settings. I always see that comment in the groups. People were asking that, please Helen, or please leaders, can you help us with the settings of the Fibonacci? So here's the simplest way you can here. We don't need to cram. When we are talking about the settings of Fibonacci, the thing we are concentrating on, those are the important zones, or what we can call the important lines. As you're seeing these coordinates which are here, these numbers which are here, those are the particular numbers we need. There are those we need, and then those which are just useless, okay? So meaning we always choose or select those ones we need from these ones here. So you just have to know which ones are important to us and then which ones are not important. After you knowing those ones which are important to us, it is going to help you to be able to say it, because literally just go and tick the one you want and tick the one you don't want. Tick the one you want and tick the one you don't want. You're getting my point. So from today, just get to know that Fibonacci has so many lines, as we have seen. It has so many lines. You're having this one, 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 and they're still continuing there up, okay? So it always has so many lines. But here's the thing. These are the particular lines you need, okay? These are the lines you need. We always need what we call 0. Okay, then after 0, we always need what to call the 23.6%. You just have to note these lines here so that when you go onto your settings, you just select those ones you need, you tick them. You're getting my point. You tick them, and then you're going to untick anything you're seeing which you don't need. So we also need the line which is 38. Okay, 38.2%. Then we need the line which is 61. Is it 0.8%? And then finally we shall need the line which is what? Which is the 100. You're getting my point. So literally these are the only lines we are going to use. These are the only, they are just 1, 2, 3, 4, 5. Meaning just get a pen and put these lines somewhere. Meaning these are the important Fibonacci zones we do need. Then if you see anything away from this, just untick it. It means you don't need it. Okay, so let me go and I demonstrate what I'm trying to say. So actually, if you want to set your Fibonacci, because as you're seeing, just observe what we are having right now, and you're going to see that after we have edited and then left out what we don't need, you're going to be seeing that this display has changed. Okay, literally, actually, these lines have percentages and then also have values. Okay, so most of the lines here, they are listed in values. Don't mind about these things in brackets. Those are prices. Okay, it means that particular line, it is on that price of that asset or the coin. So the only thing I want you to look at, those are the digits which are outside the brackets. These are the values I was talking about, but just that here they're writing in values. Okay, here as you're seeing, this one is 3.618. It is the same as 380.2. You're getting my point. So literally I'm going to be showing you how you can change that from values to percentages. If for you prefer using percentages, it is well and good. If you prefer using values, still it is fine. So if you want to set or to remove out those zones which are not important to you, you just have to come. Remember, after you've put your indicator into the chart, it is going to be displaying here. These are the indicators. Okay, it is going to be displaying here. As you're seeing it, we're having auto fib retracement. Okay, auto fib retracement. So you're going to come and tap on it. Okay, like tap. When you tap on it, you're going to get these 4 icons, and then you're going to tap on this one for settings. You're getting my point. So we are going to tap here on settings. After tapping on settings, these are the settings we are talking about. Okay, these are the settings we're talking about. As you're seeing, these so many numbers, they are all here, but almost useless to us. So meaning we are going to just go for those particular digits which I told you that they are important to us. So guys, if someone was noting down, I want you to be helping me. I'm going to be pointing on a number and you tell me whether you're supposed to tick that or you're supposed to untick it. if you've been writing down what I've been saying. I don't want to be teaching people who are sleeping there. Okay, so I'm starting with this first one. I'm having this 0. Are we taking it or we are unticking this first one? 0.
We take it 0.
We are taking it, so meaning I'm going to leave it. Okay, if you find it that the box is empty, then you just put your what, you just take it. Then you're volume noise place, please. If you know that you're in a noisy place, just leave your mic mute, because you're going to cause some disruption. People who are in quiet places, you can help us out. No? Okay, so now here's the next number. We are having 0.382. That is the same as 38.2%. Are we leaving it ticked or unticked? Guys, if you don't reply me, trust me, I'm going to put off this call and I sleep. We take it. Okay. So we put a tick. The tick is already there. So that one qualifies. Then the next one, we are having a 0.618. That is the same as 61.8. Still we are ticking it. Okay, so we leave it. Then the next one, we are having this one, 0.786. Should we leave a tick or we remove it? 0.786. Can someone answer? Remember, I told you the 5 important zones we need. I told you having that one, which is 0. I told you have the one which is 23.6%. I told you have what you call the 38.2%, and then you have the 61.8%. Okay, and I told that this 23.6, it is the same as 0.236. Then this 38.2, it is the same as this one, which is a 0.382. Meaning these ones are written in values and then these ones are written in percentages. That's the only difference, but they're the same. So guys, are we leaving this one, the 0.7686, or we are taking it out? I've told you, look at these digits. Because I want us to understand. That's why this time around I'm deciding for all of us to participate. I've said that the important lines we do need, we have 0. We have 23.6. We have 38.2. We have 61.8. And then last we have 0. So if you see on these digits I've written there, are we having anything like 0.786?
And take it.
Exactly. So we just have to put these numbers into your head. After you've put them, anything which doesn't look like them, just untick and then go. Okay, so I just want us to stop the mentality of Hellen settings. There is no big deal with the settings of Fibonacci. The only thing we need there is ticking the values we need and then untick those we don't need. Okay, so we have agreed that we are unticking this one. Okay, it is already ticked, so I'm going to remove that tick. You're getting my point. Then after that, we are having this one. One is the next. Actually, this one is the same as what? Is the same as 100%. Okay, it's the same as 100%. And we also that one was last one. It was the last one. Not so, meaning that we're also doing what? We're also taking it. Its box is this side. It is this side. This one here. Its box is this side. So we are going to do what? We are going to take it. Okay, then after we have put a tick, you can see all these numbers we are having here. We are having this one 1.272. Should we tick? Oh
no,
meaning we leave that one. Then we're having this one. We are having this one 1.618. Are we taking it? Oh,
and take all.
Exactly. So the moment you see that all those figures you wanted, you've finished ticking them, because this is what I told you, there are 5. We are having already one here, not so? Well, that is 1. We are having 2. We are having 3. We are having 4. And then we are having 1. Finally, meaning you already have our 5. What are you going to do? Just go and untick the rest, because you have already taken out those ones you need, which are what are 5. So when we come this side down, just unticking. Don't even think about them. Are you seeing that? Just untick. Okay, all these ones untick, because you have already gotten what you need. Okay, all these ones untick. You're getting the point. All these, anywhere you set tick, which is below 1, just come and do what? And untick those figures. We don't need them. Are you getting my point? So now, after you're done with that, just come here. Here, where we are having these 3 dots here. Then tap there, and then there are these 2 options. We are having this one which says reset, and then we're having this one which is save as default. Okay, so don't tap on reset, because if you tap on reset, they're going to go back in default, meaning everything you've just set is going to go away. But you have to we are supposed to save to tap on this save. Okay, meaning we are saving as default. So you're going to come and tap on this on save as default. After you've tapped on save as default, you can just press C on OK, and then you're going back to the chart. Okay, after tapping on OK, so we are back here. Are you guys seeing some changes here? Are you seeing that the other time we had some things which were up this side? Am I lying? But now, if you can see this thing as shortened, okay, we're having something very small here, meaning that we are done with the settings. So the other things you can change, like these digits, for me, I prefer when they're on the right. Right now, they're on the left. For you, if you're okay, when it is on the right, when it is on the left, you can leave it as it is. But for me, I prefer when it is on the when it is on the right. So I just come back here. Still, I come back on auto fib. I tap on it. Still, I choose this setting. After tapping on the setting icon, I come here. There's this thing here. This one, where is it? Reverse, extend. This one. These are lines. Where is it? Is it this side down? Reverse, extend, left, right. Where is it? It is here. Oh, it is here. On the label position, eh? Like where do you want your labels to be? Okay, so right now we are having left, but for me I want mine to be on right. There is also that option of the center, I think. No, here we're only having left and right. So here I'm going to choose I'm going to choose right. Okay, when I tap on right, you're going to see what is going to happen. Remember, lastly we had our labels on this side, so, and then you can see that they have changed. They are this side. I think that. So you just put them anywhere you want. It is not a must that you're supposed to be somewhere, but you put them where you do where you want. Then the other thing for me, I always edit out. I don't always want commotion on my fib, okay? So, and I prefer using percentages. You're seeing here we're having values. I think that we're having 0.618, we're having 0.5, we are having 0.38 and so on. But for me, I always prefer when they're in percentage, okay? So I just come back and I repeat the same procedure, meaning I'm going to tap here on my indicator. Okay, after tapping here, I'm going to come on setting icon. After going on the setting icon, I'm going to look for where we're having this here. Where is it? It is here where we're having the show levels. Okay, show levels. So I just have to tap here, and you can see that I'm having an option of I'm having an option of percent. So I'm going to choose that percent because it's what I need. Okay, so meaning I'm going to tap on percent, and then you can start it has changed here. Okay, then after having that percentage, still I'm going to go back and I tap on OK. Okay, so when I come back and I tap on OK, you can see that they have changed now. They are displaying in percentages. Are we all seeing that? Now we are having 61.8%. We are having, you can see them. I can try to zoom out. You can see now they are displaying into percentages. You can see that you're having 50%, we are having 38.2%, and so on. So still, in most cases, for me, I don't want to be having these prices on these levels. I hate them. Okay, I don't want my film to be congested. But for you, if you want to be showing the prices where that particular line is sitting, you can leave it. If you don't want, still you just come back. You just come back here on your settings, and then when you reach here, we are going to do what? Where is it? Prices, right, background, having reverse. We're having this one here where they are telling us your prices. Okay, for me, I don't want mine to be there. If you want yours to be there, please leave them. You're not supposed to do what your teacher's doing. Just do what makes sense to you. Okay, so I'm going to come and I untick this, and then I come back still here. I press on OK. Okay, so you can see now. Are you seeing what I'm left with? I'm only having these percentages. Are you seeing that? Okay, meaning I'm left with my zero line. I'm having the 23.6%. I'm having the 38.2%. I'm having the 50%, and then I'm having the what? The 61.8%. So that is my fib. There's nothing much I need from it. Guys, do you think that the settings were very hard to put there? Just get these digits into your tips. That when I'm using fib line, it is having so many lines, but not that all of them are what? Are important to me. After knowing that not as everything is important to you, then know what to select. Okay, put these digits into your what? Into your head. After putting them into your head, when you go to the settings, just choose those you need and then leave out the rest. Are you getting my point? Then after that, everything is just set, and the only thing you're left to know is how to use those what? Those lines. Are you getting my point? So guys, we are done with the settings, unless you're having a question about the settings before you can continue. Anyone with a question about the settings? Or we proceed on how to use this indicator.
We proceed.
So here's the thing. In fib retracement, the most thing I want you to put your concentration on, that is the word retracement. Okay? You have to understand what's the meaning of the word retracement. You've always been hearing from your leaders saying that we just need a little retracement and then it will be out of the market. We need a retracement and then it will be out of the market. Okay? So you have to understand what is a retracement. What is a retracement? So here's the thing. When we're having our chart, let's assume we're having an uptrend, something which is moving like this. Okay? Something which is moving like this. We are creating our higher highs and then the what? And then the higher lows. So after that, one thing you have to put on your mind that this particular move we are having here from this point here up to this point, okay? We are always having this first what? This first move. That is always called an impulsive move. It is always called an impulsive move. But then we are not interested in that. What are we interested into? That after the impulsive move, what happens next? Okay, what happens next? When the asset first comes back, something like this, and then it continues, it means that we have gotten a pullback. Okay, in that it is very rare to find a market which just goes straight like for. It will always first come back down, get more support, and then it continues with that trend. You're getting my point? So meaning that after getting this impulsive move, we are going to get this retracement. This is the retracement we are talking about. Some people call it a pullback, that it first pulls back a little bit. Okay? But if it comes back and it reaches this point where we came from, then that is no longer a retracement or a pullback. It is no longer. You're getting my point? Meaning that by always, it has to either to stop on the middle, like a halfway of this impulsive move. That is still, if we come from here and then we go up to this side and then we retrace again, or we make a pullback, a slight pullback. Are you getting my point? So one thing you have to know, this pullback is the one which they call what? A retracement. So now, why is this indicator called a retracement? It is called a retracement in that we are expecting that after making this impulsive move, when we come back to make this pullback, or what we can call a retracement, it has to sit on those important zones we do need. Are you getting my point now? That we can find it when it has sit on our line of 38%. Okay, we can find it when it has sat on the line of what? On the line of 60. Is it 61.8? Okay, so that's what matters. That as our retracement sat on one of our important zones, meaning if it is on one of our important zones, then it is the high time we take action. Are you getting my point? It is the high time we take what action? That if we are having let me first use this let me try to demonstrate it this way. So now let's assume this is our fib retracement. Okay, this is a fib retracement. Then we find that this fib retracement has done something like this. It has done. Who's that, please? Can you unmute your mic? Can you mute your mic? Mr. Morabi, can you help me with that person, Vanange?
Yes. Let me help you. Yes. Yes, you can go on.
So we are here. So I was still saying that let's assume this is a fib retracement as you're seeing it here, okay? This is a fib retracement. It's like this one is having so many lines here. I'm seeing 78. I don't think I need it. But anyway, then we do what? We get something like this. This is the impulsive move I was talking about. Maybe you find the impulsive move. It moves from here, from the bottom here, and then it went here. You're getting my point. Then after reaching here, remember this is the impulsive move. This one is the impulsive move we have been waiting for. So the next thing we are going to wait for is to wait for what? For what we can call the pullback or a retracement. Okay. So meaning after it reached here, it may come back. When it comes back, it is going to depend which line is it going to go. Is it going to sit on for it to go back up? Okay. So you might find it that is stopping on this what? On this 38 line. Are you getting my point? After stopping on that 38 line, you're going to take action in case it turns back and goes back up, okay? Or you might find that it's coming and reaching on this 50 line. Are you getting my point? Or you might find that it is coming, but wait a minute. Did I put the 50 when I was making our settings? I forgot it. Okay, we shall see that. So, or sometimes it is going to come back and sit on this what? On this 61 line. Okay, so meaning we are going to be waiting for this pullback to come back and sit on one of these lines. Okay, are you getting my point? That either it can sit on 61, or it can sit on 50, or it can sit on what? On 38. Meaning that after it has sat on those lines, and then we see a sign of rejection, maybe after reaching here, it is rejected maybe by a week, and then it is going back up. Okay, meaning that if you find that it's going back up, what are you going to do? You're going to enter. You're going to enter because literally this market is going to go back and is making it is probably going to be making a what? Another higher high. Are you getting my point? So that's how we literally use those zones. That if you find when the market has sat on that important zone, the important zone to you, you're going to just enter into the what? Into the market. So let's come back here on our chart. Let me first delete out this one. Now, like on this one, okay, we are having this one. Are you seeing what this market did? Okay, it was coming from here. Actually, we have two retracements. We have this one, a retracement which looks like this, This is the impulsive move, as I said, and then this is the retracement, or what we can call a pullback. Okay, so that is when we are in an uptrend. Okay, so when we are in a downtrend, we are going to see something like this. We are going to see something like this. Downtrend. It is coming down. It is coming down like this, meaning that is the impulsive move. Are you getting my point? And then we get a retracement or a pullback. So we shall have these two. Are you seeing them? This is the retracement we need on an uptrend, and then this is the retracement we need on the what? On the downtrend. But they all respect the same zones, no matter where the retracement is coming from. So we just need something like this in the market, and then I can put our Fibonacci. Meaning that if you've found something like this, you found maybe you're having this impulsive move, and then you're having this pullback, you just pull out your what? Your Fibonacci tool. You go as I showed you, and you put it there, okay? And then after putting it there, you be like this. And then you're like, where is my what? Where is my retracement sitting? Are you seeing it? It is sitting on the what? On the 50 line. It is sitting on the 50 line. Meaning after finding it on the 50 line, if it makes like confirmatory signs that it is going back up, then I can enter my market, and then we proceed. Are you getting my point? So still it is the same case. If I found it something like this, if I found a retracement, which is like this, where I'm having an impulsive move, and then after the impulsive move, I'm having a retracement. Okay, so still I would just put my indicator. I will just put my indicator. I'm putting something like this, meaning that we are having this retracement which came from up like this, and then after that is here on the 50 line or the 61 line. Meaning anytime it is coming back down, I don't expect you to enter that trade, because we are done with our what? With our trade. The market was going up, and then you can see it is coming what? It is coming back down. So you just leave out that for the person who's trading what? Spot. Because remember, in sport you only trade something which is going up. We take long positions. Hope you understand when I say that. So after that, I'm going to come back here and I show you. So I see in this particular asset, we are having this move here. What move is that? Those who have been following, I talked about that move. What did I say? First, wait a minute, I draw it for you very well. I'm having this move here. From here up to here. So which move is that?
Impulsive move.
Remember, it is our impulsive move. So after getting the impulsive move, what are we expecting next in the market? We are expecting a what? A retracement. Okay, but then after getting a retracement, it is only this what? It is only these are Fibonacci lines which are going to help us. So meaning that if you found your coin, it is on this level here, because you see in most cases when they always reach those lines which they are going to respect, they always put a rejection. Do you know what they mean by a rejection? It is when you're going to find these candles with very big wicks, meaning that this candle first came here. It was bear. It was, let me use red, because right now red is representing my bear and then green is representing my what? My bullish. So at first it was red, but then it rejected. When it reached here, it was rejected. After being rejected, it's why you can see this big wick. Hope you're seeing it here. This candle here. Meaning after reaching on this level, it was rejected. Okay, so if you find after it has confirmed this candle, it has made this rejection, then you can enter the market. Okay, then after entering the market, you're going to get out on one of these lines, because remember we have seen that these lines are highly what? Respected. But then here's the main issue: how are you going to know which line are we going to respect this time around? Because we are having this 23, we are having this 38, we are having 50, we are having this 61.8. So how are you going to be able to know which line we are going to stop on? Because that line is going to help you take your take profit, okay? Because yes, we have said that we are going to enter from here. After we have reached on this zero line, we know that by the end of the day, we are going to make a retracement, okay? We know that we are going to make a what? We are going to make a retracement. We are going to make something like this and it goes back, and then after that we shall continue with that trend. Okay, but then the point is, why is that retracement going to stop? Okay, you might put your take profit here, and as you're seeing, it never reached there, and then you're left out. You might put your take profit here and then you're left out. You're getting my point? So you have to know which line is going to be respected, and how are you going to do that? Here's the thing: after you've marked out your impulsive move, the next thing you're going to do, just look onto your left. What do I mean by your left? You're going to look at this side. This is the left, and then this side is our right. Okay, so just look, just help me and look onto your what? Onto your left. What are you going to do there after looking onto your left? Just come and spot out the, how can I say it? The previous resistance we had, or support level. Are you getting my point? Are you guys getting my point? That after you've come back onto your left, you're looking onto your left, what are you going to be looking at exactly? Just look for any resistance or support level we are having. And if I come back to my left, I can see this level here. Are you seeing this level here? That at one point it was our support. The market came here, it reached here. After reaching here, it went back up. Meaning I'm having this level here. Are you getting my point? Then after identifying this level, just put a line. Just put a line like this up to where you are. After putting your line, then just know that there are high chances for the market to come and retrace and then to reach your zone level. Because you see, after you've drawn your line like this, you can see that we are stopping on the 38 point what? 38.2 line. Are you guys getting my point? That after I've put my line, let me draw it. after I've put my line from the left, it is stopping on this line of the 38, meaning that someone who entered from here, someone who entered from here after confirming that we have gotten a rejection here, we got that rejection weak. Meaning for you, after entering from here, what is going to be your exiting point? You're going to exit from this line here. You're not going to exit from that. However, mark that even the 50 line is an important zone. Even the 61.8 line is an important zone. But then we're not having any other evidences to stand with those zones. But at least for the 38, you can see at least for the 38, it is having a added what? A added confirmation that by all ways we might stop on that line, because literally here we had a support, same, and after going through it, it means that it became our resistance, and there are higher chances of respecting this line, which became a what? A resistance, because at first it was a support. Then we are able to break through it, and the market went through it. After going through it, there are higher chances that this line, which was a support, is going to become a what? A resistance. So there are higher chances that the market is going to stop here and then it goes back down. And we can all see what happened in the market. That after reaching here, after having a impulsive move, we came back here and we stopped on this line. Are you all seeing that? We stopped on this line here, and then after that, you can see what is happening in the market. The coin is going back down. So for you, if your target was 50, you're going to be left out. If your target was 61.8, you're going to be left out. Are you guys getting my point?
Yes, please. We are
Yeah,
getting you.
Exactly. Meaning that you don't just choose out any line you want. Never do that. Yes, we have all agreed that these lines are important to us, but at least there has to be an added confirmation why you're choosing that line. You're getting my point? Why you're choosing that line. So meaning that this person who chose this line, depending on the left side, this resistance we had here, this support which turned into a resistance, you're having added confirmation. If I might come and ask you that, why are you choosing this line? Are you having any reason to tell me? Literally, there is no, because you can see when you look unto the left, it is just like this. So which reasons are you considering for you to choose that line? So literally, that's how we are supposed to use the what? Our Fibonacci. That let me try to get another example somewhere. And actually, another thing you're supposed to know, if we are in a downtrend, when the market is moving downwards, we shall always have this 0 at the bottom. And then when the market is going upwards, we always have 100 at the bottom. Here's what I'm meaning. Let's assume the market was moving up, like as you're seeing here, we're having this impulsive move, and then we're having this retracement. If we're having something like this, you always find that we're having this 100 line. We're always having it at the bottom, okay? And then we're having the 0 at the top. Are you getting my point? And then I've told you that when the market is moving down, we shall always have our 0 down, and then we shall always have our 100. But you should just not worry. Reason being, this indicator we are using here for it is auto. Okay, it is auto. As I told you at the beginning, that anything dealing with auto, it means that automatic. It does itself, like it does. The things just do themselves. How can I say it? It is automatically. It just happens. That meaning the moment I tap on that, remember I can come when I'm not having this indicator on my chart. It is something like this. So the moment I go here, as I told you how we look for that indicator, the moment I come here and then I tap here on my indicators, okay? After tapping on my indicators, I choose out this auto fib retracement. After choosing it, then I just go back to the chart. I tap on X, okay? I tap on X. Then meaning after I go back here, I find it when it is already there. I don't need to draw it. It's not like a tool, the one I've been using here. The one I've been using, that for it you have to just draw it there. Meaning you have to know where you're starting from and where you're ending. Because for it is not automated. You're getting my point. But for the beauty about the auto fib is that you're not supposed to think of the logic. Where can I start from? Where can I end from? You're getting my point. It always just automates itself. It draws itself there. So for you, the only thing you're supposed to know is identifying which level is going to be respected, and then you mark your trade, and then you execute. You're good to go. So I think let me try it on another I said, and then we see what will happen. Try on this. Miss what we get here. This one is not clear. Oh, I did that. Try here and I see. Hope you can see what I was telling that now. If since our feeble retracement is on, so any trade we are opening it is already there. Okay, so we can see this line here. We're having let me see. We're having this impulsive move. Then after the impulsive move, we're already seeing this rejection. I think this candle which rejected. I told this candle with the wicks, they always communicate a lot. They are trying to reject a level, okay? When we are rejecting a level, it's when we create these bigger wicks. Meaning this whole candle was red. Can you imagine? This whole candle was red. But then due to rejection power, we are seeing that we almost reduced this cardboard and we're having something very small here. Meaning that was rejected when reached here on this on this line here. So what we are going to have after seeing this rejection, we are going to be looking for our entries. Okay? And then after looking for our entries, meaning that if I enter from here, after I've seen this rejection, so now I'm going to enter from here. Then after entering from here, the next thing you have to ask yourself, where am I exiting from? Where am I exiting from? Because you always have to be knowing the exit. Because any moment, maybe you put your exit here, you can see what the market did. It stopped here and then it went back down. So you're going to be left in that trade. Are you getting my point? So after that, I told you that when you're looking for your exit, you just have to come back and look at onto your what? Onto your left. I think that. So meaning we're going to come back and do what? Ni mama. Zino gundi sasa right. How comes they have come back this side? Okay. It's okay. So as I was saying that after you've noticed that you might be having an entry, we are going to be now looking for what? Or exit. For looking for our exit, I told that always look onto your what? Onto your left. So we are going to come on our left. And then I think we are seeing this level here. Okay, this is the support level we had there. So we are going to do what? To put there our line. After putting your line, remember you found your market here, meaning you're going to enter and then you're going to be exiting from this line. Don't exit about that. It is very possible for the market to come and go through this line and then it continues. But then to be on a safer side, we are not sure whether to go beyond it or. So always know your exit plan. You're getting my point. So meaning after I have identified this support level which was here, and we are seeing here we had to break through it, meaning it became our what? Our resistance. So there are higher chances for the market to come back and retrace here after retracing there and then to continue with its what? With its downtrend. Are you guys getting my point so far? Or I'm speeding. Someone told me that I always rap. Are we getting the point? Am I trying to be clear? Or I'm just confusing you them?
Yeah, understanding.
Mariam, keep quiet. Guys, are we understanding of... There are some people who never say anything in the class. At least just say anything.
Okay, we are getting you, madam.
You also keep quiet. I don't want communist figures. Freddy, keep quiet. So another person, I'm seeing Ojo, you're raising your hand. What's wrong?
Me, I want to show me resistance, support, and resistance in those candles. Because most of them you are saying support and resistance. Show me by the candles.
I show you candles.
I want to see because you are explaining about support and resistance. So
I'm explaining Fibonacci. Explaining Fibonacci. Just the issue of support is just a confluential. It just helps us to confirm more. But then this whole topic is not about the support and resistance. That's some other class. Okay, that's some other class. But one thing you have to know is that, okay, briefly, I'm going to be briefly telling you about the support and resistance. Here's the thing: if we have something like this, if the market is coming from here, okay, if the market is coming from here, starting from this line is automatically becomes a support. You're getting my point? Because that's where the market is starting from. It is the support level. And then if this market goes and it stops somewhere, and then maybe it comes back down, it means that this side is a resistance. You're getting my point? That the market was trying to go, but it couldn't go beyond this level. You're getting my point. It couldn't go beyond that level, meaning there is a resistance. Something is stopping it from going through it. Are you getting my point? So literally this one becomes a what? It becomes a resistance. So, but there are some instances where we can have something like this. The market starts from here. After starting from here, it stops here, meaning this is the resistance. You're getting my point. And then the market, as it comes back this side down, it gets energy, or it gets all the energy or the fuel it needs for it to break this resistance. Because remember, this resistance has been strong. That's why the market is fading to go through it. So now this time around, we come and shoo, the market goes through it. Meaning the market has done what? Has gone through it, meaning it is no longer strong. So what is this? The one which was a resistance is going to become a support. You're getting my point? It literally turns into a support, meaning that the market might come back here, it gets more support, continues up. So anything that is a resistance, it can become a support the moment you break through it. And it's still, if we get something like this, maybe the market was going down, okay? Meaning after going down, maybe it reached on this level. This level is our support, okay? Okay, let's assume something is like this. Let me put it like this. I'm having something like this. The market goes up. Remember, this is the support, okay? Then the market reaches here. We're having a resistance. Then after the market coming back here, it comes back. It fails to break the resistance, but then it instead comes and it breaks the support. It goes through the support. I think that something which was support to Jimenye, now we are breaking into it. Meaning that this one which was our support is going to come our resistance. Meaning that the market will come back here. When it comes back here, it will bounce back and comes back. Now that I don't know whether you understand Uganda. Okay, it is becoming it is becoming a load block. It can no longer allow the market to go through it. So the only thing you're supposed to understand about support, that anything that is support, anytime it can become into a resistance the moment you broke through it. So this is what I was trying to explain, that here, at this point here, let me first remove this. Let me first remove the Fibonacci. At this point here, this one was our support. Because the market, it started from here and then it went up. Okay, meaning this support we are having here, you can always draw your lines. That was our support. This was our support. Then the market went up, but after going up, it came back and it went through the support. Okay, meaning it is breaking the support. Meaning this which was our support is going to become the resistance. Are you getting my point? And then we are always expecting that we are supposed to test. They call it a test or a retest, meaning this market is going to come back to this resistance, test it. After that, it will continue down. That's for us. We are using this advantage that we are entering from here and then exiting from this resistance, which was our support. Then after exiting from here, you're seeing that the market is dropping now. By the time it starts dropping, for us, we're already out of that trade. Am I trying to be clear? The issue about support and resistance, it needs a full class. That's the thing. It needs a full class. So by this time around, at least don't confuse yourself. We shall be there. Just understand at least the concept of Fibonacci, understand the lines, and then support and resistance. One day we are going to go through it, because it is a full class. It is a full class. I can't mix it with this one.
Thank you very much. At least I've got some clue about it. Thank you.
Okay. So that is good. Any other person with a question? Any other person with a question? Or joke? I saw your hand somewhere. Anyone with a question? Or I should assume we have all understood. Fred, I'm seeing your hand. Yes? Hellen, you can... Okay.
Coach Hellen, you see,
Listening.
my main issue is still on the support and the resistance. Like if you kind of could flash back your now. Oh God, it's not stable.
Now what?
There is why I thought, like I thought that's why I would have put your resistance. You see, when you expand your chart, your trading view from your previous, from where you used the support at the previous support, which turned into a resistance. Yep. Then I thought your resistance now would be on this next on you see where the third candle, the second candle from the first drop. Yes, there. Yeah, you have me. So that's my challenge because I always confuse those two things. Yeah.
Okay. Do you know why? Do you know why I'm taking this point? The reason why I'm taking this point is, for me, this area which has been put into the Fibonacci, I don't consider it, because literally, if you consider retracement, just understand this impulsive move. We are coming from here up to here down, meaning they are also concluding this area. They're including it. Are you getting my point? Because this impulsive risk, Gundi, if it wasn't included, we would have had something like this. Let me try to draw it for you. We would have had something like this. Our FIB would have been stopping there. Are you getting my point? Meaning it would have, this would have been our retracement from here up to this point you're talking about. But due to the fact that that's why some in most cases I always want us to use this auto fib, because they always draw for you the right thing. If you use that tool, you might not know where to start from your Fibonacci and where to end it from. You're getting that. So literally here, if we consider this auto fib retracement, you can see that our impulsive move was this. Because we always mark our impulsive move starting from this one and then 0. You're getting my point. So we are coming from here. That's why you're seeing this line which is in the middle. I seeing this line, this dotted line which is in the middle. Yes. That one. I seeing it. It probably shows you that they started from here and then they are stopping here on this line. So meaning this is our retracement. There is no way you're going to consider this, yet it was taken as part of the retracement.
Wow.
You're getting that? So meaning we are having an impulsive move here. Then after having the impulsive move, we are waiting for the retracement. So as you're waiting for your exiting point, you can't consider this because it was already taken as the what? As the impulsive move. That's why I always tell you that come back, just look onto your left and then leave this area which has been put into the Fibonacci drawing. Leave it. Then look for the next point we are having immediately after this drawing on your left. Have I answered you now?
Very, very much. Thank you.
Okay, that's good. So Alima, I'm listening to you now. Alima,
I just wanted to question. I was just appreciating.
Just send me Chindazi.
Yagaraje bindazi constellation ya kupasa maganya.
Just send me Binda. So literally, I wanted to make something here because on what we have just looked right now, the whole market is in downtrend. Okay, so even though open which trend, most of them they are in a downtrend. So it's very easy to see a retracement which is on a downtrend. And I wanted us to see something where we're having an uptrend. Okay, so now literally this one is having an uptrend. Remember I told you for the uptrend we're always having our 100 at the bottom. Okay. And then we're having our 0 at the top. Then at the downtrend, we're always having the 0. It is always the opposite. You're getting that? It is always the opposite. So now I want to show you this. I think this one here. We are seeing we had this move here. I seeing it. And we called it the what? What's this move?
Uptrend.
I'll beat you. It is an impulsive move. Impulsive move. You're getting, yes, we are an uptrend right now, but I wanted to know the name of this move, okay? I told you when we make this move, that is the impulsive move. When we bend a bit, that is called a retracement or a pullback. The market is trying pull back to get more fuel, and then it can continue up. You're getting my point? So literally here we had this impulsive move, and I told you after we have seen an impulsive move, the next thing we are going to try finding out is this what? Retracement. And then after finding the retracement, we want to find our entry and then the exit. You're getting my point? So after we reached here, I told you for you to know now this time around, actually the opposite about this. When we are dealing with a downtrend, the resistance or the support on the left is going to help you to get the exit. But then when we are dealing with an uptrend, this resistance or the support is going to help you to get an entry. What do I mean by that? That when you go back to your left like this, we are seeing this is the current resistance we had. Not so? So we are going to put there our what? We are going to put there our line. We are going to come and mark it. Oh, is make a trend line. It's here. We are going to come and mark it. Okay? So after we have marked it, you can see. Urakwenda trend over na confirmation, my confirmation bajifunda ku lower hours. And I don't want to go through that. So we can all see that after here, after reaching on this line, like it was here in the middle. Actually, it wasn't in the line because sometimes it can be in the middle. It was in the middle of the 61 line and the 51 line. Okay, so we can always, it's not a must that we're supposed to be on these exact lines. Sometimes you can be just between 61 and then 50 what 50. You can be between 50 and then 38. You're getting my point? So this time around we are here. We are having our resistance between 61 and then 50. Okay, so meaning that's why we expected the market to stop from and then it was going to go up, meaning we are supposed to enter from what? From here. Let me see whether I can get any other example. So it's not a must. One thing you're supposed to know that it's not a must that everywhere we are supposed to be having what? We are supposed to use a Fibonacci, because some of you might want to force it to be applicable everywhere. Okay, so that's the one thing you're supposed to know, that it's not a must. It's not a must. So if you go and you see that your Fibonacci it can't be implemented somewhere, just leave it, because there are some cases where we're not having any retracements forming into the market. Okay, we're not having any retracements forming into the market. Even this one, you can see it. You can see that it made this impulsive move. After the impulsive move, if we come and consider this area here, you can see here, and you can see that the market came back here and then it is coming back down. Okay, so literally that's the only way you're supposed to do what. I think right now I can only get examples of the downtrend, because the market is really going down. The whole market is going down. I think I'm failing to get something. I don't think I can get it right now. The whole market is going down. That's the general trend we are having right now. It is the downtrend. So you can still see this, that we are having this move here. Okay, and then after the move, like literally, you just have to do that. That's the only art which is there. I don't know. I thought that at some point I could find something, a typical uptrend, but now like I think what happened here. This is what I told. There are sometimes the market can come and just go, because this one had a retracement here, and we expect the market to stop here. Okay, but it went above it. Okay, so sometimes it can go above it, but you will never get to know when it is going to go past that level. Okay, so for you might want to be greedy, and then you put your take profit this way, and then you're trapped. Okay, so it's better to exit from here, meaning the person exited from here, they already had their good percentage, something like let me try to see something like from here. They already had their percentage of what? Of 9%, and then you're out of the market from this point. So unless someone is still having a question, I think even the time is done.
Yeah, just appreciated today one thing, that this is better than the way how they explain the high, low. This one, I think it is little better, because you said you can just look at your left. If you see the support or the resistance down, and you just look at
don't just say that it's better than the higher high. Those are the fundamentals of the market. You have to know them by always. The higher highs and the higher, they are complicated when you've just started, but those are the basics of the market. That's what you have to understand, because we always need to understand the trend of the market. We always need to understand the trend of the market, and that's the only way you can understand the trend of the market. So other times they are complicated and confusing, but at the end of the day, you just have to understand them. You just have to understand them by force, like it or not. We need to understand them. So with time, don't worry, you have to understand. Though I know at first they are always challenging. You're trying to master a lot of things at the same time, but then we shall be there with time. But higher highs, higher lows, they must.
Babuze
Mariam.
Yes. Mwe temulina mimwa Katonda awulira essaala y'omuntu ng'evudde gy'ali. Buli omu alina ebizibu.
strategy ng'olwedde tuli eri tukaaba biwumbi.
We shall be out. This is not a quick whatever. Babita atya? Get rich whatever. Babita batya scheme.